Okay, good morning, everyone. By my watch, it's now exactly 9 a.m., so we might as well get started. I expect a few people to still join in the next minute or two, but let's start with the introductions. My name is Henk Heymans. I'm the Head of Audit for RSM South Africa, based in Johannesburg. And with me is Michael Steenkamp. We're going to take you through this session. The power of being understood is our tagline, and I think that's very appropriate here today because we're going to talk about communication in financial reporting and getting understanding through financial reporting. I think you will find that today's session is a little bit lighter than the previous IFRS sessions that we've presented. That we have presented. It's not as technical, which is, I think, a nice relief for a Friday morning to just sit back and talk a little bit about how things can improve in financial reporting. What we're going to talk about is, or Mike is going to take us through most of the amendments to IS1 and IS8. There's a new practice statement, not a new practice statement, a practice statement. There wasn't one before on materiality, and then couple of other disclosure changes and so on. Basically, the objective is, let me get the next slide up, to more effectively communicate in financial reporting. That's a new idea, isn't it? Who has ever seen financial reporting as a way to communicate? I think in the past or in the last few years, we've been so bombarded with its disclosure and its listings rules and its transparency, and it's all of these things that we just end up adding so much information in financial statements that we maybe lose sight of what the financial statements are supposed to do. And what they're supposed to do is communicate. We need to remember that. Going back to effective communication. As I said in the introduction or in the email that went out to introduce this webinar to you, we're sitting with this situation where we've got disclosure overload. So there's a lot of information in the financial statements on the one side, but on the other side, people are complaining that they can't find the relevant information. You often find allegations leveled against either auditors or preparers of financial statements. It doesn't give me the information I need. But then someone else says, but it gives too much information. That's what we're going to talk about today. And I'm actually really passionate about that. I think my partners will also know, are passionate about reducing unnecessary clutter in financial information. One of our managers call it disclosure bloat, and that's exactly what it feels like. It's just the financial statements get so bloated. These are the principles, and Mike is going to take us through maybe some of the principles and then a lot more on the details. What has been happening on the international standard setting front to try and address this, to make the financial information more useful, more relevant. I suppose reliability doesn't come into it. It's always been there, but useful and relevant. I think that's what we are trying to achieve now. And Mike has also got a couple of very nice examples of, we've used international companies, examples of how you can achieve good disclosure or proper disclosure, or rather, let's not even call it disclosure, communication in financial statements. That's what we're trying to do. So with me is Mike Steenkamp. We have presented before on these a couple of times, and Mike has presented on his own. He's our head of IFRS, and I enjoy presenting with Mike because he's just as passionate about his subject as I'm about mine. We do it because we enjoy it. So Mike, you can carry on with the technical part. It's too difficult for me, and I'll interject every now and then if there's some questions.
Great, thank you very much, Henk. Yes, like you said, it's not going to be too technical, but just hopefully give the people present on this webinar this morning just a better idea of what's happening in the market and what's happening out there in the world of disclosure and communicating with the stakeholders in the financial statements. As you rightly mentioned, Henk, I think the tools that a lot of us use, being Caseware and whatever other tools there are in preparing financial statement, doesn't really help because it's quite easy. Let's just rather put it on. I think the view has been historically, let's just rather put a note on or a paragraph on or a sentence on. Let it rather be there than not there. And what's happened is we're getting accounting policies that are 10, 20, 30 pages long. And then you've got the notes, which are further 20 pages long, and you're ending up with a 70, 80 page set of consolidated financial statements. And I think barring auditors and some very passionate accountants, not many people actually read those accounting policies, I don't think. So the idea is, yes, exactly what Henk said. With this is a long time coming, and it's been with the ISB, it's been with various set standards, with various boards and bodies to improve this communication with stakeholders and to stakeholders. So I'm going to go through some of the principles that are there and why we're doing this, and like Henk said, a nice example, and also just kind of the materiality statement. Remember, this is not materiality from an audit point of view, it's specifically to the financial statements. So just, and go through those kinds of principles and where we are now. So please feel free to, if you do have a question, to just drop it in the Q&A. And if we've got time at the end, we will happily answer that live. What we do typically as well is, if you have a question, please leave us the question and we'll get those emailed through to us and we'll respond via email. That we do find that works quite well as well. So yes, so as Henk mentioned, so what has been issued in the new practice disclosure initiative practice statements is these principles of effective communication. So this is what everything is based around. This is where what we need to be looking at in when we including disclosures in our financial reporting, whether these are applied. So the first is that it must be entity specific. We need to get away from these boiler points. And again, that's where disclosure software is a bit of a negative, is that we need to be entity specific. They need to be tailored to the company's specific circumstances. I'm sure, unfortunately, we've got into a point where if we compare 10 sets of financial statements that are prepared on a disclosure, so using some sort of disclosure software, all 10 of them, or maybe 9 out of 10 of them, accounting policies are going to look exactly the same. And that's what we need to try and move away from. We need to make let the information be entity specific. It needs to be simple and direct. Let's get away from these long paragraphs trying to explain something. We need to use simple descriptions and sentences and just make the information easy for the users to understand. It needs to be better organized, and that's we've got into this habit of, okay, cool, we've got our typical primary statements, as they're called, which is the statement of comprehensive income, your financial statement, financial position, your cash flow, and your changes in equity statements, and all of those. And then we've got 10, 20 pages of accounting policies, and then we've got our notes. Why not rearrange that and put things together, put accounting policies with the notes? You know what I mean? It doesn't need to be in that order, and that's where we get into now with this as well. Linking information, again, could be, you'll see in the example that I've got, is putting the information together, maybe having the accounting certain highlights in one section and other areas like working capital in another section, and having an accounting policy for those with the notes, so that the users don't need to go back and forth and turn 20, 30 pages between different sections in the financial statements to find what they're looking for. Better formatting is also possible, and just setting it out nicely, and then also just try to get it free from duplication, avoid any unnecessary duplication that might occur. Where that does happen, obviously, sometimes we have the same information disclosed in 3 different places. Let's get away from that, and then we need to enhance comparability. I think this is this is really aimed at disclosing information in a way that enhances comparability among companies in the same kind of industry, just to make it useful for investors and for users of these financial statements to understand them just a little bit better, and just to make it make more sense. So
Mike, Mike, before you go on to the next slide, if I can just interrupt, I think I'm aware that a lot of the people that are listening today are preparers of financial statements, not necessarily auditors or users. So I'm thinking to myself now, is this bad news to you or is it good news? Because in a way, as a preparer, I can understand that you may be a little bit apprehensive when you read this, because now all of a sudden it has to be entity specific. And Mike has just scolded those accounting policies that are always word for word the same. And now you go, oh my goodness, now I've got to go and find a different way of saying what IFRS 9 is trying me to say. So in a way, it would have been easier for you just to put tick, 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 tick and switch the notes on. But it's actually going to be easier this way, because all that they are asking you to do is just tell the story of the company. And nobody can tell the story better than you can as the preparers of the financial statements. You've just been through a year, and this year has presented new challenges. It's COVID, and it's the economy shrinking, and it's employees and all of those things. So just present that story. What has kept you awake during this year? What has been difficult? What has been good in the business? What are the results? And just present it in a way. I've heard someone saying, like You Magazine, just so that people can just read it and understand it. It's going to take a bit more time and a bit more creativity than just ticking boxes and switching it on. But I don't think we should see this as a bad thing. I suppose it's going to mean that we need to know the standards very well, because the standards also tell us the minimum that needs to be disclosed. So you can't just type whatever comes in your mind. You must then again go compare it to a checklist and check that you've disclosed everything that's in the standards. So you need to know it a lot better. It's easier than, it would have been easier to just tick boxes. I don't know how you feel about it. You can maybe let us know in the chat box. Sorry, Mike, you can just carry on that.
No problem. I think that is a good point. I think to a lot of people it could be quite scary, but I don't know, maybe I'm the odd one out, but I found this very exciting. I think making financial statements useful and specific, and hopefully our providers of financial statement software has a way that we can maybe tailor these things better and more easier as to what they currently are. So that's going to be the challenge, I think. But where we've got specifically listed clients, for example, where they're preparing annual reports, or you're using a different format, Excel or Word or something, to prepare your financial statements, I think this is the perfect opportunity to press restart, and you can make these really start making your financial statements really useful.
The only part of that slide that made me a little bit nervous is that last one on the enhanced comparability. That feels to me like I need to go and do a little bit of homework. So Amanda commented here, she would love to tell a more relatable story for donors. And I'm sure you would love to, Amanda, type all of those first 6 bullets. You'll have happy to do. Enhanced comparability, I wonder how many of us will be able to just off the top of our heads, just compare our business with someone else's and see, well, you don't put it in the financial statements, but make sure that the information that the users expect to compare, that they are in there. That's probably also not that difficult, because I think as preparers, you know already what your users are interested in when they look at your financials compared to other financial statements. So yeah, I think it's exciting. You're right.
So moving on to the example that Henk mentioned that I've got. This is a company I thought I included because I think we all know it. If we've got a mother, a daughter, a wife, a sister, we all know who Pandora is. Pandora is the jewelry. They make those well-known charm bracelets and designer rings and necklaces, etc. It was quite a new company in all truth, founded in 1982 as a family-owned business out of Copenhagen. It's now the third largest jewelry company in terms of sales after Cartier and Tiffany & Co. So just that's quite interesting. And it's in its last annual report presented a turnover of 60 billion rand. So there's a success story if you ever wanted to hear of one. But they've gone and they've pressed restart on exactly what I said, obviously being a listed entity now, and they've reorganized their financial statements. So we've just taken a couple of snippets out of their financial statements, or what it was before to what it looks like now, and you can quite clearly see the difference and how better it looks and how easier it would be for users to use these financial statements. So the first example is just simply the index. Who would have thought, let's start at the index. So before it was like, as we all know, you just list 500 things and what page they are at. They've gone now, and there you can see in the little orange blocks, I've said what has been achieved in the better disclosure in the principles for better disclosure by doing this change. So it's entity specific, better organized, and better linked. So they've broken up into sections. So they've got the basis of reporting, and then they've got the results for the year in section 2. And that it doesn't have to, and then that's what they find important. And then in section 3, you'll see they deal with invested capital and working capital, and then they've got capital, the capital structure and the financing side of things, and then they've got all the other stuff that they don't feel is as important. How much better is that if you as the user can go to a specific section if you are wanting to find out something specific, instead of having to just go through a normal standard index. Section 3, for example, what they've done and what they did this is an introduction to each of the sections. I'll just use this one as an example. Better linking and being simple and direct. They've had a little introduction in each section and say that's what it is. It's working capital and investment capital. And very briefly, you see there in 2 or 3 paragraphs explained exactly what's happened, what happened, what the increases or decreases are, and what's gone on and what's important to them. So that's simple and direct and better linking different areas in the financial statements. Just something as well for users, what they've done is they've gone and they've just, instead of having paragraphs and paragraphs as we used to, they've just said what they've disclosed some alternative performance measures, which you are allowed to do, and they've just then also included how those are calculated. How often do we get ratios included in financial statements? So we take our calculators out and we try everything divided by this and divided by that and times this, but we can never get to the number. They've actually gone now and included the definitions of those, what they mean when they're explaining something, and those ratios and how they calculate it. So I think that's also very, very useful. And then again, there's the enhanced comparability principle that's met there. Something again, why not again before when they're dealing with certain things, they've got just paragraphs again. Why not put it in a table? Or why not use a graph? Why let's I know we were typically accountants and we're not very always the most creative people, but why not let's use graphs, let's use tables. I think it is clear that from the before and the after in this slide now, it makes much more sense and is way clearer to see something in a table format as opposed to having to read through that paragraph to understand. And it's saying exactly the same thing. What they did, which I really, really like, and this is one of my favorite things to do, I think, which would make a lot more sense, is what they've done in each note, if you want to call it that, they've included symbols. So you'll see there's a little symbol there in front of accounting policies, and they've got a little exclamation mark in front of significant accounting policy, the significant accounting estimates. And this is all part of the same note. So they've got the other provisions note, they explain what it is. They've got the accounting policy right underneath that saying how it's accounted for. If there are any significant estimates in that entity, in that area, they disclose it then straight away, and right afterwards they'll have the numbers. So it's all there in one place together. This is what simple and direct, and this is something that I'm a big proponent of, and really think that this is very, very useful to put all the information rather than having the accounting policy on page 10 or whatever, and then you've got the significant estimate relating to provisions on page 20, and then you've got the actual provisions notes on page 45. Why not put it all together? It just makes so much more sense.
You may actually find people start reading the accounting policies. That will be a shock.
Can you believe it? So I think that this part to me, I think is probably the most exciting. Sorry, I do get excited about these things. The next thing that I just want to deal with, so that's just the examples of what happened, and there's probably 100 different things that different people are coming up with, but that's just an idea of something that has been done already. The next thing I want to deal with is this definition of materiality. So this is the definition that came into, and IS1 and IS7 has been amended with this, and we've got this definition now for materiality in financial statements. And in financial reporting, should I rather say. So information is material if it's omitted, misstated, or obscuring. If by doing those three things, it could reasonably be expected to influence the decisions of the primary users of the financial statement. So something left out, something presented incorrectly, or even obscuring. So by putting too much information is obscuring the financial statements. And by putting too much information in, like we said, like we all do, we could be materially misstating that financial statements because we could be obscuring other information that might be important.
We're actually starting to get queries like that from our regulators, the JSE's monitoring, or even the IRBA. When you put something in a financial statement note that's not relevant, like the one we always see is borrowing costs, or the definition of capital, equity, how to define, then the regulators sometimes ask us, why are you putting in this unnecessary information? Are you trying to hide something? Are you trying to put so much in that the user just stops reading it and then you miss some important things? So on purpose, obscuring relevant information by putting a lot of irrelevant information. It's becoming a thing.
You mentioned the share capital. I always laugh at that one, Henk, when I see it in the financial statements, because if you read the accounting policy, it says the difference between the assets after deducting the liabilities. And then great.
That's equity. Equity is the difference between assets and liabilities. Great.
So then just getting into a bit more of the definition in detail. So obviously materiality depends on the nature or magnitude of the information, or even both. And you need to look at it as the financial statements at a whole. So whether you don't look at specific notes, you've got to look at the financial statements as a whole, and whether including something or not including something is material to the financial statement as a whole, in order for those for the users to understand that information, or to understand what you're trying to report. Just three aspects we want to look at in the definition, and that's obscuring the information, and then who are the primary users, and then considering if what's included or not included would reasonably be expected to influence the user. So what is meant by that? So in obscuring information, the new definition includes this fact that we've dealt with that now in Henk in my comments, but in obscuring information, it could be vague or unclear language, for example, not giving the whole picture, scattered information, that's what I said, information all over the show, inappropriately aggregated information, maybe inappropriately disaggregated information, or hidden by immaterial information. That's the point that Henk made. So we could be putting all this immaterial information in the financial statements, and we're hiding what is really important and what is really the material information in the financial statements. So those are just kinds of some things that are meant by what is meant by obscuring the information in the financial statements. The new definition refers to primary users as opposed to the old one, which we refer to just the users. They decided that being just applying to users was very broad. So that could be anybody. It could be your tax authorities. It could be your company registrar. It could be anybody that picks up your financial statements. It could be termed as a user. So they've now included this term primary users. And in assessing whether information could be reasonably expected to influence the primary users, an entity needs to consider who the characteristics of those primary users and the entity's own circumstances. So the characteristics would include something like it would be expected for somebody to have who has a reasonable knowledge of the business and economic activities of the entity, and even at times, even a well-informed person and a diligent user of those financial statements might need to seek the aid of an advisor to understand complex stuff within those financial statements. So.
I was thinking now, it might actually be a good idea for the people on the call, the preparers, to document this somewhere. If they think about when they start preparing the financials, who are the primary users? I've never seen it in a set of financial statements or a preparer doing that, but it's always been a problem to me, and it's become more and more of a problem. Everybody now wants to read our financial statements. It's this whole thing about stakeholders and the community, and you can't provide all the information that everybody wants. And I like this definition that they are now focusing on primary users. So primary means not everyone. We need to identify the primary users, and maybe you paint a bit of a picture. What does this primary user look like? Is it someone like, sorry, if I can go back to Amanda. Amanda used the word donor. Okay, it's a donor. What is a donor? That means they're not a sophisticated financial market analyst, but they know what they are looking at. They know what they're looking for when they are making funds available. So that is the primary user. Am I going to put very hectic analysis, financial analysis and forward-looking information? No, that's not what they're interested in. What is this primary user interested in? So I'm just thinking it might be a good idea for you to spend a few minutes before you prepare your financial statements and think about, who is this actually aimed at? It's not meant to be for the auditor, to keep the auditor happy. It's someone who needs to get information out of this. Paint a picture for yourself, and then, maybe it will guide you a bit.
And the last point of the definition is just what is meant by reasonably expected to influence the users of the financial statement. So will the information, will it influence the users of financial statements if it's included or excluded? And we need to consider the entity-specific circumstances. So the nature of the business. I think Amanda's example of donors is a great one in this instance as well. So what is the nature of the business? What do they do? Are they publicly accountable? The industry they operate in, not all companies are going to have donors. So this is this is very entity-specific. And the great concern with liquidity positions. Those are the kinds of things we need to think about and what will influence and reasonably be expected to influence the users of the financial statements. And just remember, this could change from year to year. Let's not copy and paste from last year. Has something changed? I think Henk mentioned it earlier. COVID is probably the prime example of something that might not have been applicable in your financial statements last or 2 years ago, should I say now. And in your next set of financials, now you're preparing the financial statements for December 2020, it could look very, very different from December 2019. And this is what information needs to be communicated to the users and needs to be updated on an annual and a regular basis. So how do we do all of this? I know we've gone through it, and actually the practice statement actually deals with almost like a 4-step process. In the next slide, I've got a bit of illustration in a like a flow diagram kind of thing. But first, what they say we need to do is we need to identify. So we start right at the top. We identify all information that could possibly and potentially be material. Then we go and we assess that information, and we find that we found it in step 1 and determine, is it actually material or not material? Can it be left out? Step 3, we organize it in the draft financial statements. We prepare financial statements, and we rearrange it how we think the primary users would want to see it, and then we just review those to see that it makes sense after we put it all together. Just in a bit of a flow diagram, quite nice. But I think if you look at step 1 at the top there, requirements of the IFRS standards, I think that's where we all typically are, and that's where we stop. So we get there, we disclose everything that's required by IFRS, and we stop there. We give a draft set of financial statements to our clients or whatever it is, and that's where we stop. We need to move down to step 2, 3, and 4. So we need to review that, take out what might not be material, and really, when we're considering the users, organize that information in a better way that it paints the picture that it needs to be painted, and then we need to review those financial statements to see if it actually makes sense and we have included everything. So let's move away from step 1 and stopping there. I think step 1 is where we get stuck, because that's where all the disclosures of the software that we use is. So I think that's kind of where it is, and we then should let's move on and actually go through those financial statements and amend them where necessary.
Mike, I don't know if you kept an eye on the comments. We've just had a very good comment from Guru. Guru, for those of you that don't know him, he's one of our partners in the Botswana office. And Guru said it might actually be a good idea to disclose the primary user of the financial statements. I don't think that's a bad idea, because that means that, as Guru says, everything falls into place. You show what you've considered, and that's where you're going. So thanks, Guru. I'm glad you're here. Welcome.
Yeah, why not? Exactly. Well, put it in your financial statements who you believe your primary users are and who these financial statements are meant to be for. Why not? So the effective date is actually been. So it was 1 January 2020. That's the materiality practice statement, should I say. So that's on whether information is material to financial statements. And those amendments have been adopted into IS1 and IS7. So just bear that in mind when preparing your current financial statements for any year ends from December 2020 onwards, that this materiality standard is already effective. The general purpose and really the general presentation disclosure standard was an exposure draft in 2019, and that disclosure includes all the proposals from the IASB on how to improve the communication. So that is out there for comment at the moment. Just something I thought that was very interesting when I saw that what they were proposing to include, and one of the big changes is in your statement of profit and loss, your statement of other comprehensive income, where if you look on the column on the right hand side, does that look familiar? I hope it does. It looks like a cash flow statement.
Cash flow.
So they're hoping they're wanting to structure your income statement, let me just call it that, the old term, in the same way as they do your cash flow statement. So you've got your operating, and then you've got your investing, and then you've got your financing, which I think is great. I think it makes sense. And again, and then your notes can then tie up and your accounts policies from there properly as well. So that's one. I just thought an interesting change that has been proposed. I know we're on time, but we're almost at the end, so we've got a couple of minutes left, and then we'll wrap up. So what's also included, which you saw, which Pandora did, was that obviously management performance measures, they are proposing to include a definition for that. I know lots of times companies want to include some sort of, whatever industry in, want to include some sort of performance measure, be it an EBITDA or a operating profit or a whatever it might be that's important to you and to the users. They are allowing to define that and allow you to disclose that in a single note in the financial statements, which I think, but then again, why not include how that is calculated, your whatever ratios? So I think that's going to be a very, very, very interesting point as well. And I think we're very welcoming to a lot of companies, I think. And then also there are some proposed changes to the cash flow statement. So actually matching, so I know like certain things like interest and dividends and all those kinds of things, most entities we need to put them to what they relate to. So if they're operating or financing or investing, we need to actually break that up and put it where it relates to, and dividends as well. So there are some minor changes coming to the cash flow. I don't think we've got this too wrong. But the main one would probably be the income statement, that I think is quite an interesting one. The effective date for this, we don't have one yet, no exact effective date. The comments were due in June last year, but obviously due to COVID, they extended the comments to September last year. So all comments have been received. So they're obviously in feedback. So they're going through that now, and just to understand, and obviously then hopefully we'll get a final version of this and then a final disclosure draft that will get a disclosure standard released. So hopefully that is coming soon, we hope, and I think it's very exciting, and I think it's definitely a passionate thing for Henk and I, as Henk mentioned in the beginning, for us, that we find this very, very useful and very, very important, and I think it can only help. So on that note, yes, thank you very much. Henk, I don't know if you've got any closing comments. I think it was very useful. Thank you everybody that has joined. If there's any questions or anything, please feel free to email us. We're available to help or to assist. If something wasn't clear, let us know and we can hopefully clear that up for you. Henk.
And thanks for your comments on the chat line. I get the sense that there's a bit of excitement going on, that people are happy to start using this as a way of communicating. So my challenge to you, let's see if you can come up with something and impress us next year. Maybe next year we can use your financials as a case study. If your audit partner has a problem with it, then tell them, first of all, it's your financials, it's not their financials. You can decide what goes in it. And if they've got a problem that they think something doesn't comply with the standards, send them to me. So the good news is, I think I'm going to give you the day off. Mike and I officially give you the rest of Friday off. You can go home and just think about how you can make your financial statements more informative and impress us when we come around to do the audit. Thank you very much for your time.
Thank you, everybody.